Hi everyone, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's session, we are going to start with a new topic, that is income from salary. This is the part 1 of this topic. In this part, we are going to talk about we are going to discuss about the meaning, definition of salary, allowances, perquisite and valuation, deduction under section 16, then computation of income from salary. So without wasting time, let's start the session. First is meaning of salary. Now, salary is what comes into exist. Salary comes into exist as a result of employer and employee relationship. In short, salary is a regular income of every month. It is the relationship between the employer and employee. So in this relationship between employer and employee, the employee performs his duty and the employer provides him salary. So in any company, there is the relationship between employer and employee. So when employee performs his duty or provides some certain services to the employer, so in return of this duty, in return of this services, the employer provides the salary to the employee. So that's why the salary is a regular income of every month. Salary is income or remuneration by him. Salary is what? It is a income, it is remuneration received by an employee or individual. For what purpose he is receiving that salary? He is receiving the salary for the service which he is rendering to the employer. In return of that, employer is giving the salary to the employee. Any amount paid by employer to employee for contribution of service after specific interval is known as salary. So any amount which is paid by the employer to employee for contribution, who is giving the contribution of service? The employee is giving the contribution of service. After this contribution of service which employee is giving to the employer gives the salary for the specific interval. It can be for month, it can be for 2 months and so on. So salary is remuneration for continuous service provided. Who is providing this service? The employee is providing the service to the employer. For charging any income under the head of salary, the relationship between two persons, employer and employee. For charging any income under this head, under the head of salary, the relationship between the two persons must be of employer and employee. So without such relationship, amount cannot be charged under the head of salary. So this was the move to the next part, that is definition of salary. Now definition of salary as per 17 subsection 1 of Income Tax 1961. So salary is defined in the section. Now what is wages? Wages is given on daily basis. Salary is given after every month. Every month the salary is given. Wages means it is given on daily basis. So wages is also salary as per the definition. Then any annuity or pension. Now any annuity and pension is also salary. So annuity and pension means what? Pension after retirement of employee. Okay, employee will get some amount of money on regular basis. It is called as pension or annuity. So pension the employee is going. So even pension is included in salary. Now next part is any gratuity. Now gratuity is also included in salary as per the definition of Income Tax Act 1961. Now gratuity is what? Gratuity is the amount It is gratuity is the amount given by the employer to the employee. Now this gratuity is given at the time of retirement. It is given in the lump sum amount. It is any fees, commission, perquisite or profit in lieu of or in addition to any salary or wages. So this is also included as salary. So any type of fees, any type of commission, any type of perquisite then any type of profit which is in addition to the salary or wages will be included as salary. Then any, now leave encashment means what? See, in any company a employee is getting casual leaves. So leaves are in balance. So at the end this leave will employee will get in the form of cash. So that is called as leave encashment. So this is also included in salary. Next, annual accreditation to the Provident Fund, then contribution made by government, central government to the employee pension scheme, 1961. Now this is the computation, or you can say the format of income from salary. So computation of income from salary. First you have to prepare this table, particulars and 2 columns for amount. Now first will be basic salary. Okay, basic salary will be given in the problem. It can be given for basic salary can be given in the per month, or it can be given in annual form also. Then in basic salary you have to add all taxable perquisite. Then after adding all the taxable allowances and taxable perquisite, you will get gross salary. From this gross salary you have to deduct, okay, less deduction under section 16. So there are 3 deduction under section 16. This is professional tax. So after you deduct all these 3 deduction under section 16 from the gross salary, so balance will be called as income from salary. Okay, so this is the now next part is allowances. Now what is allowances? See, allowances is a fixed quantity of money given regularly in addition to salary for the purpose of meeting some particular requirement connected with service rendered by the employee, or as compensation for unusual condition for that service. Okay, in short, allowances means any additional payment employee for specific purpose. Okay, so allowances is addition payment made by the employee for specific purpose. For example, traveling allowances, okay, traveling allowances, rent, house rent allowances, convenience allowances. So these are what? These are all addition to the salary which is given by the employer to the employee. So allowances are part of salary given to employee to meet some particular requirements such as house rent, convenience, traveling allowances and so on. So now this allowances, okay, there are 2 types of allowances. First is fully taxable allowances, and of the allowances are taxable. So there are 2 types of allowances, fully taxable allowances and partly taxable allowances. Now we will see the fully taxable allowances. So these are the fully taxable allowances. So dearance allowances, this is fully taxable allowances. This allowance is due to high cost of living. Now this allowances, dearance allowances, city compensatory allowances is given to the employee. Okay, who is giving? Employer is giving to the employee to meet the inflation. Okay, city compensatory allowances is given to the employee if the employee is living in some big. Next is overtime allowances. Now overtime allowances means what? Suppose the employee is working in the organization after his service, after the duty hours, means overtime if he is doing the service, so the overtime allowances is given to the employee. So this allowances is given for overtime work done by the employee, and this allowances is fully taxable allowances. Next is fixed medical allowances, then tiffin meal allowances. Then there are other allowances such as project allowances, guardian allowances, warden allowances, then washing allowances, family allowances, servant allowances, and etc. So this type of allowances are fully taxable. Next is cash allowances. Now cash allowances means employer may provide certain type of cash allowances to the employee in some case holiday purposes. So if these allowances are given in the cash form, then it is fully taxable. Then non-practicing allowances. This allowances is given to the doctors employed by the government, and entertainment allowances. So these all allowances are fully taxable. Now next is partly taxable allowances. Now partly taxable allowances means some part of the free from tax. Then which are those partly taxable allowances? The following are the partly taxable allowances. Particulars and exempted limit. Exempted limit means free, some part of these allowances are free from tax. Now first is children education allowance. Now children education allowance is given to the allowances is given by the employer to the employee for his children. Now this exempted limit, okay, exemption limit is 100 rupees per month per child, maximum up to 2 children. Suppose the employee is having 2 children. For those 2 children, the education allowances is given 100 rupees per month per child. Okay. Then hostel expenditure allowances. So this is also given by the children for the education purpose. They are outside city and where they are staying in the hostel. So those hostel expenditure allowances are given by the employer to the employee. So exemption, okay, how much is tax free? So tax free is 300 per month per child, maximum up to 2 children. Next allowances is transport allowances. Now transport allowances or traveling allowances. Now see, this transport or traveling allowances is fully taxable in case of normal person. If the employee is normal, okay, then the allowances is fully taxable. And rupees 1600 per month is exempted in the case of blind, handicapped person. Okay, so for normal person, transport allowances is fully taxable, whereas if the employee is blind, if he is handicapped, then the exemption amount is 1600 per month. Next is house rent allowances. House rent allowances is what? HRA. So house rent allowances is given to the employee by the employer. Now for this purpose, okay, exemption limit or exempted from tax is this, okay. So lower of the following is exempted. So house rent allowances, lower of the following is exempted. From these 3 conditions, whichever is less, it will be tax free. So first is actual HRA, next is rent paid minus 10% of salary. Now 10% of salary for HRA. So for the calculation of salary, the salary formula is salary is equals to basic salary plus DA, that is dearance allowances, if applicable for the retirement benefit or in percentage plus commission if in fixed percentage. Okay, so then rent paid minus 10% of salary. For the calculation purpose of salary, the salary formula is this. Then next is third condition, C point, 40% of salary in other city or 50% of salary in metro city, that is metro city like Mumbai, Kolkata, Delhi, Chennai, Bangalore. If the employee is if he is living in the metropolitan city, then HRA will be calculated by 50% of the salary. Same 40% of salary and 50% of salary. The calculation of salary is done. You have to do find the salary by this formula: basic salary plus dearance allowances if applicable for retirement benefit, or if the dearance allowances is given in the percentage, and plus commission. So whichever of these three condition is less or lower, then that will be exempted. Okay, in the next lecture we will take one example of how to calculate house rent allowances by these three condition. Next is underground allowances. Now underground allowances is granted to an employee who is working in underground coal mine. If the employee is working underground like coal mines, so exemption is limited up to 800 per month. Then compensatory field area work. So this compensatory field area work is given to the military person who is working on the mountain. For that the exemption limit, okay, 2,600 per month is exempted. Then uniform allowances. This allowances is given to meet the expenditure incurred on the purchase or maintenance of uniform. Then tribal area or scheduled area allowances. So this is exempted from tax up to 200 per month. Then running allowances, 70% of received amount or 1,000 per month, whichever is less. So these are some of the partly taxable allowances. So from this partly taxable allowances, in the point of view the examination, which is important: children education allowances, hostel expenditure allowances, then transport, house rent allowances. These four allowances are very important because in university examination the questions comes on these four allowances. Next after allowances is perquisite. Okay, now perquisite are those payment which are received by an employee from the employer over and above the salary. Perquisite is what? Addition to the salary. And these perquisites are given by the employer to the employee. Perquisite is defined as benefit attached to an office or position in addition to the salary or wages. Perquisite may be in cash or in kind also. Now perquisite can be given in the form of cash, or it can be given in the form of kind like gift, vouchers, etc. Perquisites are included in salary income only if they are received by an employee from his employer. Now what is the taxability of perquisite? Okay, these are the perquisite which the employer is given to the employee. So first perquisite, okay, that is profession tax. If this profession tax is paid by the employer, then it will be exempted from section 16. Section 16 is what? Deduction. So if this profession tax is paid by the employer, then it will be exempted from section 16, and this will be what? Taxable. Then income tax paid by the employer will be taxable. Then salary of servant, watchman, gardener, cook, sweeper, if these are what? Perquisite which is given by the employer to the employee. So suppose the employee is given by the servant, watchman, gardener, cook, sweeper, and the salary of all these people or this service are paid by the employer, then it is fully taxable. Then medical facility, hospital bill reimbursement by employer, it is taxable. Then education facility. Now education facility and education allowance are two different things. Education facility comes under perquisite. Education facility means, see, it means employees' children are studying in the school run by employer. If the employer is having the school, okay, and that school is run by the employer, and employee children are studying in the token is given in cash, then it is taxable. Now see, suppose this accommodation is unfurnished and it is owned by the employer. Rent-free unfurnished accommodation owned by the employer. The valuation of this perquisite is considered in salary on the basis of population of that place where the house is provided. So this valuation of unfurnished and furnished accommodation will be based on the population where the accommodation is given, in which city the accommodation is provided. On the basis of that city population, the valuation of this accommodation will be determined. So the population, suppose the population in the city is less than 10 lakh. If the population in the city is less than 10 lakh, then the valuation of this accommodation will be 7.5% of salary. Then if the population in the city is between 10 lakhs to 25 lakhs, then it will be 10% of salary. If the population is above 25 lakhs, then the valuation will be 15% of salary. Now for the purpose of furnished or unfurnished accommodation given by the employer to the employee, the calculation of salary will be based on salary is equals to basic salary plus dearance allowances if applicable for retirement purpose or retirement benefit, or if the dearance allowances is given in percentage, plus commission, plus bonus, plus fees, plus other taxable, all other taxable allowances. So this is the salary formula. After we get the salary formula, we have to find the 10% or 15% of the salary. Okay. Then if in case of rent-free furnished accommodation, if the employer has given the accommodation to the employee, the accommodation, if it is furnished accommodation, then we have to add 10% of cost of furniture in the above valuation. Okay, so this valuation is for unfurnished accommodation. Okay. Unfurnished means the accommodation is without furniture. So this valuation for furnished or unfurnished accommodation will be based on the population of that particular city and the salary. So population is less than 10% will be 7.5% of salary. Population, if it is between 10 lakhs to 25 lakhs, 10% of salary. 25 lakh above, population is above 25 lakhs, 15% of salary. And for this purpose of salary, this will be the formula. Okay, and if the accommodation is furnished accommodation, then we have to add 10% of furniture in the above valuation. Next will be, if any amount recovered from employee, then deduct from the above valuation. Now all this theory part we will implement in the sum solving, then you will understand better. So important is what you need to understand the theory, and then we will solve the example. Then if the accommodation is taken on rent or if the accommodation is on lease by the employer, then the lower of the following two is taxable, that is 15% of salary or rent paid. If the accommodation is provided in hotel, then following of the following then the lower of the following two is taxable, that is actual charges paid or 24% of salary. So for this salary the formula will be this: salary is equals to basic salary plus dearness allowances if applicable for retirement benefit, plus commission plus bonus plus fees or other taxable, all other taxable allowances. Next is valuation of motor car. Okay, now sometimes the employer provides employee the motor car for the official purpose. Okay, now this motor car is used by the employee for private purpose also and for official purpose also. So how to determine the valuation of motor car? Now suppose there is two conditions, that is if the car is owned or hired by the employer. If the car is owned and hired by the employer, then there are three sub purposes. See, the car is owned by the employer. Okay, then the car is, if the car is used for official purpose, then what will be the valuation? If the car is used for private purpose, then what will be the valuation of that motor car? And if the car is used for both the purpose, for official purpose and private purpose. So the valuation of motor car, first is if the car is owned by the employer, then if the car is used for official purpose, then it is fully exempted, that means fully tax free. So if the car is used for official purpose, then it is fully exempted, means fully tax free. Then if the car is used for private purpose, then actual running and maintenance expenses, okay, from actual running and maintenance expenses, add the driver's remuneration, add the depreciation at 10% per annum, or when the car is taken on hire, then whatever is the hire charges, from this hire charges less the amount recovered from employee. Now this is very important, okay, that is if the car is used for official as well as private purpose, then in this there are two conditions. First is what? Running and maintenance expenses are borne by the employer. If the running and maintenance expenses are given or paid by the employer, then first will be what? We have to check if the car is less than 1600 cc. 1600 cc, that means if the car is less than 1600 cc, then exempted amount will be, the valuation of motor car will be rupees 1800 per month plus the remuneration of driver, that is 900 per month if the driver is provided. Then if the car is more than 1600 cc, then 2400 per month plus rupees 900 per month driver salary if the driver is provided. Next is running and maintenance expenses borne by employee. Then the car is less than 1600 cc, rupees 600 per month plus rupees 900 per month driver's salary if the driver is provided. Next is if the car is more than 1600 cc, in that case rupees 900 per month plus rupees 900 per month driver's salary if the driver is provided. So this is very important, valuation of motor car for the official as well as private purpose. So this will come in the examination. So we have to check whether the running and maintenance expenses are borne by employer or by employee. So if the running and maintenance are borne by employer, then we have to check the car cc, that is whether it is less than 1600 cc or whether it is more than say 1600 cc. After that, next is if the car is owned by employee. See, first was if the car is owned by employer. So this was the condition. Now if the car is owned by employee. So if the car is owned by employee, if it was used for official purpose, then it is fully exempted. If the car is owned by employee and it is owned and it is used for private purpose, then actual expenses incurred by employer less the amount recovered from employee. And if the car is used for official as well as private purpose, then the running and maintenance expenses borne by employer will be actual expenses less 900 per month driver's salary, and running and maintenance borne by employee, it will be nil. After that is Provident Fund. Okay, now there are 4 types of Provident Fund. Public Provident Fund, that is PPF, then Statutory Provident Fund, Recognized Provident Fund, and Unrecognized Provident Fund. Now suppose in the Provident Fund, okay, what will be the taxability of this Provident Fund? Now Provident Fund are provided by the employer to the employee, and some Provident Fund the employee can remove, can open the Provident Fund account, like Public Provident Fund. Suppose the employee's contribution is there in the Public Provident Fund, then it is exempted. And if the employee's contribution is in Statutory Provident Fund, it is exempted. Then Recognized Provident Fund, it is exempted, and in Unrecognized Provident Fund, it is taxable. Next is employee's contribution. In case of Public Provident Fund, it is not applicable. Employee's contribution in case of Statutory Provident Fund, it is exempted. Then in case of employee's contribution in Recognized Provident Fund, it is exempted up to 12% of salary, and in Unrecognized Provident Fund, it is taxable on retirement. And next is interest credited. Okay, in case of Public Provident Fund, interest credited is exempted. In case of Statutory Provident Fund, interest credited is exempted. In case of Recognized Provident Fund, the interest credited is exempted up to 9.5%. In case of Unrecognized Provident Fund, interest credited is taxable. Then amount withdrawn at the time of retirement, exempted in case of PPF, exempted in case of Statutory Provident Fund, exempted in case of Recognized Provident Fund, and Unrecognized Provident Fund is taxable. Okay, so Recognized Provident Fund is very important to remember. That is, employee's contribution will be exempted up to 12% of salary, and the interest credited will be exempted up to 9.5%. Now for the purpose of this salary, the calculation of salary, the formula is salary is equals to basic salary plus dearance allowances if applicable for retirement benefit, or in percentage, plus commission if it is given in fixed percentage. Okay, so this is the taxability or tax free exempted for the purpose of Provident Fund. Now next part is deduction from salary. So what will be the deduction from the salary as per the section 16, that is deduction under section 16. First is standard deduction. The standard deduction will be the lump sum amount of 50,000 rupees. Entertainment allowances, in case of government employee it will be deducted, or in case of private employees entertainment allowances is not applicable, that means it is not deducted. And professional tax, if it is paid by the employer then we have to deduct it, and if it is paid by the employee it should be deducted deducted under section 16. So standard deduction, entertainment allowances and professional tax. So these are the deduction under section 16. Now once again we will go to the format of income from salary. Basic salary we have discussed about the taxable allowances, then what are taxable perquisite, then deductions also. Okay, so this is the format of income from salary. So I hope you have understood the theory part of income from salary. The theory part of income from salary is very important to understand. Then on the basis of theory you can easily solve the example. So in the next upcoming lecture we will discuss about the examples of problems which were asked in university examination. So I hope you have understood today's session. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.